Gentlemen, we're back.
Hey, so Dylan, I see that you and I are in our pajamas. Peter's looking real sharp there, and the two of us
full
button later in the day for me.
Yeah. Like just we're in the US. Peter's over in the UK, where James Bond is from. It's looking really good. And us two slobs over here. Not sure what's going on. Do we need to go get changed before?
Listen, I heard that wearing pajama pants when you're working remotely gives you like 5% more efficiency.
Are you wearing pants? You have any pants on?
I mean, they're pajama pants. There's no chance I'm standing up. But
plaids?
No, actually, listen, I'm in Virginia, so they're camo. So that's
nice. So we just couldn't see your
pajamas. Legs. Yeah, exactly. I just blur it off.
Yeah. Well, another show where at least one of the co-hosts decided to have a shower before it. It's good, I suppose.
Yeah, no, I had one a couple of weeks ago. Peter, you got some interesting news maybe coming out here. What's the big day you have here?
Got some interesting news brewing. So today is the official due date for my wife with our first baby. So far, no news. Hence, committed to the age of the MGA. But anytime I might have to rush out.
So we'll ask her to maybe just put a pause on things in case the
so just I put this in the calendar a while back. So yeah,
I haven't met your wife yet, but now I'm sure she's very excited to meet this.
We're very excited. I mean, you guys know it. I think it's going to be life-changing and exciting and scary all at the same time.
Yeah, absolutely. Yeah. And if you stay recording this podcast while she is yelling at you via text or WhatsApp to let you know it's time. I'm pretty sure we're going to see our first live podcasted divorce. So that's
it could well go viral, but
that's interesting.
Don't want that.
We need to get the numbers up. Yeah. Guys, anything interesting happening this week? Any news? We got. I'm excited. In a couple, maybe we'll get a free ticket out of this. We got InsurTech New York conference coming up. I think that by the time this goes live, it'll still be relevant. So that'll be fun. Nice. Got a couple of good panels, maybe even a guest from.
That's actually where today's guests were found, was from an InsurTech New York event. So
really,
that's fantastic.
Oh yeah. Well, in New York.
Yeah. New York.
New York's a big place. I know you come up every once in a while.
Yeah,
it's big.
It's
more than just a conference there. One conference.
Yeah, New York's a big insurance place now. Actually, we're working with so many companies out of there, and I just booked my flight the other day for the InsurTech Insights event in June as well.
June, that'll be nice.
Looking forward to maybe doing some kind of age of the MGA event in New York soon, right?
Maybe, or just another plug here. We'll see if we can get some free tickets out of that. What else should we plug?
Let's just keep saying.
What else do we want free tickets for? Super Bowl, World Cup. What else? Just keep saying.
Yeah, we've got the World Cup in the US 2026.
That's pretty exciting. Are you gonna make the trip?
Love to. So the Lotto team are in Guadalajara in Mexico, which is one of the host cities of the World Cup. So I think it'd be
Doug, are we going?
To get out there.
If the Netherlands are in, if the Netherlands are playing, I'll be watching.
Yeah.
Hopefully they beat
as an England fan, we're used to the constant disappointment in these things. So,
Well, England beat the Netherlands in the last go round. So, or no, that was the
Euros, a rare win. Yeah. But I love that technique, Dylan. I think that's a key thing for the age of the MGA. Just keep plugging things in the hope that they may give us stuff. Yeah.
Sounds good.
Maybe what kind of snack foods could we use? Some bugles or
next time we're going to sit here with
pork rinds from the UK.
If we do this at the right time of the day, I can sit here with some of my favorite alcoholic beverages and plug those a bit.
Oh, that'd be great. Nice. Maybe a nice Newcastle or Old Speckled Hen.
Oh, this is my just my casual bottle of Chateau Neuf de Pop. If they're listening,
this guy, he's dressed. Listen, he's dressed like he drinks wine. We're dressed like we drink a warm ale out of the pull tab.
Hey, we're all startup founders. I'll drink what anyone gives me. Yeah, it's fine.
That's true. Peter, we got some interesting guys coming on. You want to tell us a little bit about these guys?
Yeah, I think these guys are going to give us a pretty unique insight. So we have Charles and Andrew from Ladder Re. Their background is amazing. I think they're some of the smartest people we're going to speak to in the series, and we speak to some really smart people, and they're going to give us some incredible insight about a level up from the traditional layer we speak to, the MGAs, as a reinsurance MGA. So it's going to be a pleasure to get Andrew and Charles on this week's show.
All right, should we bring him in?
Let's bring him in.
Let's do it.
All right.
Hi, everyone. Welcome to the Age of the MGA. We're in for a treat today because we've got not just one guest, but two, telling us their story about how they founded a reinsurance MGA. So welcome, Andrew. Welcome, Charles. Thanks so much for taking the time with Doug, Dylan, and myself. Let's get straight into it. We'd love to hear, maybe before we get on to business, a little bit about your personal backgrounds and about you. So, Charles, maybe start with yourself.
Oh, sure. I'm a recycled academic. This is my fourth time trying to be an entrepreneur. The first time involved mowing lawns, and the American audience will understand the entrepreneurial opportunity that people's backyards represent when you're young. Then I tried stuff in real estate, like a lot of people, and now I think this is the one that's going to work. So I met Andrew, and I was like, you know what, this idea of like having our own business, I think this is the right time. We'll talk about the conditions why we knew it was the right time, and I knew that I'd found the right partner. So
that's amazing. And I think mowing lawns is a bit like a hairdresser, right? The grass always keeps growing, so there's always work.
Well, that's what I thought. I was like, how can this fail?
Was there something specific you were saving up for? I wanted to get a Nintendo back in the 80s. I picked up cans, never made it.
I wanted better wheels for my bike because my passion is bicycle racing, and it's a very expensive sport.
Nice. Was it BMX style or when you were a kid, or was this road racing?
No, I'm a criterium road racer. If you know what that is, then that's it.
So that's a high-end sport for a teenager. I feel like you were really top notch.
I was pretty glorious when I was a lot younger. Yeah,
semi-pro, definitely semi-pro.
This is where we're gonna slice in a picture of your giant quads as an 18-year-old, right?
Yeah, they were pretty well developed back then. Yeah.
Very good, very good. Andrew, over to you. We'd love to hear about you.
Sure. I've been in insurance basically my entire career. I don't have quite the varied background that Charles does, but I definitely lean on his expertise with startups because this is the first time I've done anything on my own. I actually, I'm a recycled accountant, if we're using that word. Started in public accounting, kind of fell into insurance. The accounting firm that I started for the first day, they basically ask you, they have like 4 giant buckets of like types of industries you could be in. Financial services, I think, was my number 1 or number 2, but I was actually originally assigned to go to a client up in like Minnesota, and I was basically going to have to move there and live there for like 9 months, until they eventually were going to move back to the Philly area. That's where we're from, and I at the time, I was dating a woman who would become my wife, and I was very much had my roots in the Philadelphia area, and so I kind of said, I really don't like this idea of having to move. And they kind of said, well, if you can find someone to switch with, then you can just swap your entire schedules and you're good to go. So that first day, I literally swapped my schedule to stay local. And it happened to be that I was going to be auditing an insurance company. So I started auditing insurance companies with the Big Four, and then eventually moved into the insurance accounting side. I moved to work for a carrier. And from there, at that point, I had been doing, I've been doing this for over 20 years now, between Sarbanes-Oxley accounting and internal controls and all that, I got to, and working for small companies, I got to know every little part of how an insurance company functions, from marketing and premium and claims all the way to the back office and ultimately reinsurance. There's a lot of reinsurance buyers that have come from finance backgrounds these days. So this, eventually ended up at this carrier, and I was expressed my interest in being involved in the business. And there was an opportunity to be the reinsurance buyer. So I moved over into that role. And that's where eventually met Charles, because then Charles got hired on shortly after I moved into the reinsurance role. And that kind of leads into our story because we started working together. So I have a very much accounting numbers background. And now we've, reinsurance, definitely know reinsurance like the back of my hand. And and now we're underwriting together, which is exciting. it's a lot of fun. So
Do you imagine the accent you would have if you had lived in northern Minnesota? Kind of that
oh god, yeah, life would have
you're
been
like,
completely different if I had ended up there, and that was not.
if you would have tried to start a company with Charles, I'd be like, I'm all right.
Yeah.
So I grew up in Chicago, so
I get the Polish, yeah.
Yeah, and
Yeah.
we would
South,
be,
South side.
yeah, we would be Fargo-Re if you guys know what I mean. You know, our
We
logo
may have
would
run
be-
into each other still. Who knows? I mean, you know.
The logo could be a wood chipper. I think that'd be
Right.
Yeah.
very apropos. Yeah.
Yeah. So
So you guys
Yeah.
met at
So we worked at a carrier. It's a U.S. E&S carrier, and yeah. So I was doing the cat modeling and the analytics, and so a lot of that is useful when you're buying reinsurance. So that's why Andrew and I worked closely together. And then we hit it off. So like, I don't know, 2 weeks after we met, we were having hoagies for lunch. So if you've been to Philly, you know what a hoagie is.
All right, hold on. Time out. The most important question anyone's asking is really if you love the Chicago's Italian beef better or the Philly
Yeah. All right.
cheese.
So, okay, all right. So
That's what
parentheses.
everyone cares about.
Parentheses. Okay. Parentheses. So Philly is famous for the wrong sandwich. Okay.
yes,
Because-
agreed.
Because the Philly roast pork sandwich is really good, and like you can't find it in most places. But I don't like the Philly cheesesteak. Every time I pick one up, I'm like,
Hot take.
I pick up a Philly cheesesteak. I'm like, what is wrong with this Chicago Italian beef?
Yeah.
So, close parentheses.
Well, and so I have had the Chicago Italian beef, and it's like a knockoff cheesesteak. So I still love cheesesteaks. Charles is right though. The roast pork is absolutely the best sandwich in Philly. I still love my cheesesteaks though. So
we're creating some acrimony between these
yeah,
founders.
no,
Yeah.
that's fine. We've had this argument for years.
All right, here's the hottest take of the entire episode. The pizza steak is the best of the steak sandwiches. I'm just saying it out loud. I love it.
All right, Dylan. I don't know.
Sorry, it's delicious.
Can I talk to you after, Dylan?
Yeah.
We need to-
I just
I
say,
just got kicked off the podcast.
our audience asks, will the age of the MGA hit the big topics? And I think we've answered that in the first couple of minutes of this episode.
Yeah,
That's it.
I hope
That's
so.
it.
Great. So, guys, look, the origin of the business I found fascinating. I'd love to hear your take on it. You were looking to do your own direct
That's the point of
MGA.
the hoagie is between mouthfuls, we're like, we got to get out of here and start our own thing.
Yeah,
Okay.
exactly.
Yeah.
So
Yeah,
tell us
so-
about that.
So
We
we
had a bunch
so-
of ideas and none of them came to pass. But then finally this one did. So I'm going to let Andrew explain it.
yeah, well, and I'll just give Charles a lot of credit because I never saw before I met Charles, I never had it in my mind that I was ever going to try my own business, be an entrepreneur or anything like that. I mean, Charles would say that it was in there and he just, found it. But I really don't believe I would ever have done that. But, having lunch with Charles once a week for months on end, if anybody's met Charles knows that, he will influence you. And he did. He we definitely talked, he would just pick my brain and we would, and I would pick his brain and we would just chat about, different things going on in the industry and ultimately kind of concluded that like, yeah, we work well together. We're like yin and yang. And we should go out and do our own thing one day. And it was kind of a dream at first of like, yeah, one day, sure. And it was just kind of like, whatever. But then it started to get more and more serious as we kept doing this. We were like, well, maybe we really should, and as we kind of grew up in the company together that we were at, spent a lot of time together, and just started to realize that like, listen, we know a lot about what we're doing. We're learning a lot. We're getting exposed to a lot, and maybe we should. So ultimately, where the opportunity came, this carrier was actually starting to get into the cannabis market back in the early days, and we, of course, Charles and I would go on the road together buying reinsurance. So we were trying to buy reinsurance for this cannabis book, and you had to carve it out separately because basically there were the reinsurers that would write it at the time. You could count them on one hand. And we kind of realized very quickly, like, wow, this is kind of that once in a career opportunity where, there's such a lack of capacity or such a lack of markets, I should say, that, maybe this is something that we could do. And we started to put our heads together and said, well, how do we take advantage of this opportunity? Unfortunately, we're not, private billionaires or anything. So we couldn't just go start a reinsurance company on our own. But we said, like, look, at this point, we've worked with underwriters for a long time. We know how reinsurance works. We know cannabis in and out. We were involved, from the very beginning in this product. And we know a lot of people in the market. We know the players. So we kind of said, why don't we go and try to bring more supply? And our original plan was actually to start kind of international. We said, there's got to be some Asian carriers or somebody in South America that, doesn't, just wants to get into the US market and think that this is maybe the way to do it. That actually was incredibly difficult. And where we ended up getting some traction was working with smaller carriers. So there are a lot of smaller carriers or just alternative capacity ultimately, but just smaller balance sheets that are out there that they focus on one little thing. They've never thought of themselves as a reinsurer. They don't normally have access to that market. They don't have the reinsurance underwriting expertise. They certainly don't have the cannabis expertise. Even if they may be interested in cannabis, but they don't have the balance sheet that can handle it, or the product expertise or anything. So we started working with these small balance sheets and kind of said, well, listen, you don't need to build your own product. You don't need to do anything other than act as a reinsurer. And by the way, we have the contacts, we know the industry, and we can underwrite it for you and basically package it all up and make it very easy for you to kind of just say yes or no. So that was where we started, just ultimately looking with these, working with some small balance sheets. We got ourselves started, and to this point now we have essentially 3 balance sheets that we work on behalf of. They're all, again, relatively small, but small can go a long way when you add them together. And it's an industry that just desperately needs capacity. So, they'll take anything they can get in many places.
These balance sheets, is it a diversification for them? Is it a new revenue stream, experimentation, some combination of all? What are
all the above? Yeah. No, in some cases they like the diversification. I mean, one client in particular of ours, they really like cannabis. They knew, they had been hearing about the profitability of the cannabis market. They had wanted to get into it, but they didn't have the expertise. They didn't know how they would get into it. They don't have the size, all that kind of stuff. And they realized they could come in and make money just taking a 10% share of a couple different treaties, and they've got a book of cannabis business. And it actually performs much better taking slices of 3 different things than, going all in on yourself. So, yeah.
I love that approach. For me, I think, one of the big questions for MGAs, whether they're a reinsurance MGA like yourselves or they're a direct MGA, is capacity. How do we get that? How do we get the carriers to support our vision, our idea? And I found it at all sides of the insurance industry, right? When I was on the underwriting side, you go to brokers and they have existing books. They're not really interested in giving you that. They want to see what they can do from a new perspective with you. How can you generate new revenue, new opportunities, new income? So I think that's really fascinating, your story. And also a lot of people relate to going through the journey of receiving perhaps a lot of no's on the way from other carriers to get there. That's part of the entrepreneurial life, right?
Mm-hmm.
What are some of the best no's that you've gotten, or just like the most ridiculous? I think we've all been in those positions where it's clear they did not even look at this.
Are you talking about the no where they don't even look, or the no that comes after they string you along for weeks?
Those are the best. The third date no.
Yeah. We had lots of those. We even had to fire a customer once, but that's because they wanted us to be idiots. And
yeah.
So that's to me, that's the best no.
Right.
Yeah. I mean, really, that was one pretty early on where, we as a startup hadn't even really gotten our legs fully under us, and we're the ones turning down the capacity because they're trying to make us into something we're not. That was, to me, it kind of blew my mind. I was definitely, took me a little bit to get my head around that we were going to make that decision, but you have to, because you have to think about your business. You can't just think about, capacity. One capacity provider wants us to do something, and maybe it's not exactly what we want to do, but there's a part of you that could be like, but I'll just do it because we can make money. And we're trying to build a longer term sustainable business here and build a reputation as good underwriters, strong underwriters focused on our niche. And if our capacity is just completely not aligned with that, then we had to make a tough decision to say, we need to focus on the long-term strength of our business.
To be a little more precise there, that wasn't simply that capacity provider wanted us to look at something we weren't, and have less of the focus that we wish to have. Is that they specifically wanted us to just like undercut the market and get in there and gobble up market share on their behalf. And we're like, well, no, because that just starts this price downward spiral where everybody tries to outstupid each other, and then that's dumb. So that's why we fired them.
Yeah.
So I think it's a very brave and sensible move to make. And a lot of people in your shoes probably wouldn't do that, and they'd maybe have a good first year in business. But what happens after that, right? What happens when the treaty comes for renewal or that capacity pulls out? Or
Peter, if they had been a gigantic big balance sheet and they wanted us to do that, I probably would have said, yeah, let's go ahead because you can back that up. But they were pretty small. And I was like, you're not going to make a difference, to us, but you're just going to ruin the market.
Yeah. And then you weren't going to make it because you have too small of a balance sheet. There's no way you can win on that long-term war against the bigger balance sheets.
That's where knowing your numbers, Andrew, and coming from an accounting background helps in this thing. Be amazed at how many MPAs are not so savvy.
I'll point to Charles and say the economic background because he, I know the numbers for sure, but he knows the game theory of it all. He could push us there.
Well, I mean, it's what I was doing before I got into insurance. But Andrew's financial acumen, his skill has just been monumentally important to us in what we're doing, and it continues to be like one of our greatest strengths, if not the greatest strength.
So that's a great leading statement into what is it that you needed to support your company, right? Who are the people with an expertise that you needed to build the company? Obviously, we just talked about kind of an economics background, and also, just to be clear, Charles, the failures that you had from previous businesses, small businesses, is that that leads to making those great decisions. That was the learning, the expensive learning you did to say no in some of these cases. And then obviously Andrew's background in accounting. So what else did you need on the team? Who else do you have? What are those key hires?
We're
the whole company.
We're still trying to figure out if we need anyone else at all. Okay. I mean, different ideas and not just being in our own echo chamber. Yeah, of course. Like that's always something that we have to work, to be concerned about. But we've taken lean startup and made it practically a personal religion. Okay. We bootstrapped the first 2.5 years. It was just our savings. We didn't find investors until maybe a year ago. And that's been a whole adventure on its own. And with them, it's more like, okay, let's dedicate some capital to your underwriting, and not go, make a bunch of headcount hires or technology investments. And now we're starting to look at that. Like that probably is something that we need to do. Like, really think about our operations and make some investments in technology and just think about how to build this. But Dylan, to date, we've operated as stupid simple as you could possibly imagine. It's mostly Microsoft Outlook, Excel, Word, and our phones, and that's it. Okay. So I'm an analytics guy. I would love to have, a data marts in the cloud. I would love to be able to do all kinds of stuff with data science, and we just, haven't been doing that because we've been just focused on getting the business, growing the revenue base, and getting traction. And our business is, reinsurance is a lot of person to person. You've got very few transactions per year. Each of them is large dollar, which means that there's lots of negotiating, right? And it's just person to person negotiating. So sometimes it's actually face to face, but mostly it's emails and phone calls. But just getting one deal done takes months and months and months. So that makes us different than an MGA. Right, because like NMGA processes dozens, maybe more submissions per day, quotes, premium transactions, all of that. So they have an immediate need for a technology solution that solves those operational problems they have, which we just didn't face. And frankly, we could even make the case that right now we're still not facing that. But we're thinking ahead. We're thinking about, okay, when this gets bigger, we basically have, at least 3 goals. One is, can we get someone else to do the work? So like if we were going to hire somebody, it would be, can we find somebody to just, replace us so that we can just focus on strategy and business development and meeting people and not, crunching through things. And And then we just started talking to an AI company about like how they might help us. And so that's interesting because maybe that immediate need of like, can we find someone else to take some of the workload off our shoulders doesn't have to take the form of a human being. And I know that some people find that awful, but I don't. I think, well, number one, that's probably inevitable. So since it's going to happen whether you like it or not, you might as well learn to like it. You know? So I'm trying to just like learn as much as I can about this and see where it goes. The second thing too is like if the business is just going to grow in what we write, our premium writings, then just the amount of stuff we have to deal with is probably going to get bigger than what we can handle, the two of us. So that's another reason. And then, at some point we probably want to sell, and you want to have it built so that somebody is, okay, I'm buying this. It's not just these relationships that depend on you specifically, personally, and those people, but also this stack, whatever you want to call it, that can do all this work if I buy it from you. So those are the reasons that we're looking at that. But why you guys are interesting to us is one, because some of the MG entrepreneurs that we've met along the way talked about you. Two, because we met you guys in New York. I think it was in November, and that was a great conversation. Three, I really like your pricing model, which is a topic that I think matters, because one question a lot of people have just all the time is, why is insurance so slow to adopt technology? Like this perennial question. And technologists are, a little bit animated about how come the insurance company is blah, blah, blah. And there are lots of reasons, and we can go into, I don't want to talk about carriers, but just MGA startups. If you impose this huge sunk cost, right? And you got to make this investment in technology. And we went there. Early on, we talked to a completely different company than the AI company we're talking to now. And they had, they seemed to understand what we were trying to do, and what they wanted us to take on technology was pretty interesting. But it was just like, we can't justify this, right? Because we were still building the revenue. And so it's the chicken and the egg problem. So I just feel like, as far as I'm concerned, that's one of the biggest problems with technology adoption. And in my experience to date, most people on the we sell you technology side just haven't been taking that seriously. And I don't know if that's because they grew up in a world where there's so much investor capital behind them that just like, yeah, buy everything you need, but your MGA entrepreneur person doesn't have that. A lot of them are like us, they're bootstrapping. And then you come in and say, you got to sign on this thing. And first this, pilot project is you sink $10,000, $20,000. Then it's how many $1,000 a month. And you're like, what?
Yeah.
So, I'm trying to answer your question, Dylan, by saying we just realized okay, what we do is not all that high tech. It's business complex, but it doesn't really require a lot of complex technology. On the other hand, AI really makes you think differently about that, because before all the AI stuff, I really felt like, well, reinsurance is not a lot of transaction volume per day, nothing standardized, and all of it is constantly being negotiated all day long, person to person. So all the tech solutions that you had 10 years ago in the market were kind of irrelevant to what we do. But I think that's changing big time.
I think there's so much amazing insight and content to consider there, and you're probably speaking to the proverbial choir in that we're pretty aligned. Doug with his company at Tourist, Dylan with Typhon, and Binder and myself at Lotto, in our philosophy of we're not bothered about vanity matrix. We're bothered about real business and progress and actually achieving things. And perhaps the age of social media, and particularly influence on LinkedIn, is leading a different vision to what starting an MGA is like compared to the real world, and where every dollar, especially when it's your own money, Charles and Andrew, for the first 2.5 years, really, really matters. And we've all lived that and felt that and understand it. So I think that's a great takeaway for the audience to take there. Yeah.
When it comes to, I think with AI, it's going to be interesting because you can build, so a lot of the solutions that maybe you've looked at were built with very large teams, probably backed in some capacity, especially in the insurance space, by private equity. And so they need a 7-figure contract to justify their long-term existence. And that's changed over the last 2 years where, Peter, I'm sure you see this as well. We can sell pretty much the same product that's been developed in the same way to very small customers at a different type of price point and contract than a large customer. And for you to just like group everybody together and say, this is a take it or leave it, right? Whether you're a multi-billion-dollar reinsurer or, you know, just getting off the ground nascent reinsurer, it's quite silly to take that approach.
I think sometimes people in the social media driven, you know, whatever world of like, here's a picture of my breakfast. And then in fact, your breakfast doesn't even look as good as you put it on Instagram, but you know, like everybody starts to act like this. Like, not every entrepreneur is a tech entrepreneur, but I think that gets lost. I think that there's been this like mashing together of if it's not tech, you're not an entrepreneur. But if say you're a wholesale, you know, producer in insurance and commercial insurance, and you've got a really good understanding of this market, you know who these businesses are that need insurance, and it's a pain in the you know where to find coverage for them. That right there, that's a problem that if you're smart, you can solve, and that's an opportunity. And that may or may not require a big technology investment. I think that at the same time, there's a danger that those people, especially if they're, you know, career salespeople, they dramatically underthink like how much tech they're really going to need. But that's not the same thing as they have to spend these big dollars on the newest, you know, most shiny, you know, ITC Connect, whatever, you know, whatever. They just need something that's bread and butter simple and that can scale and that's priced in a way that they can take it on and grows with them. You know, I just feel like until recently, like, I don't think technologists thought that way. Maybe I'm wrong. You guys tell me, you know.
No, 100%. And I mean, again, especially in the insurance space, I think because of the private equity backing. So Charles, you'd mentioned AI kind of working with a company or kicking the tires, it sounds like. Where do you see like real help and benefit, maybe for your business in particular, or maybe MGAs at large when it comes to AI? Like, what are you really excited about right now?
Well, that's a two-part question. So I'm going to turn it over to Andrew because he does a lot more of the actual underwriting. And this is what we're excited about, is we think this could actually help us with just like the actual meat and potatoes work we do. And he can talk about that. And then the question about MGAs more generally, we can all come back to that.
Yeah. Yeah. I mean, from our perspective, just in terms of the day-to-day, I mean, you know, a reinsurance transaction is still going to be human to human. Nobody wants to talk to an AI to talk about their, you know, $10 million reinsurance transaction. So you're always going to have that aspect. And even as Charles said, you know, it is business complex. So every reinsurance transaction is a little bit different. They all have their own unique parts to it. So ultimately, I don't feel like an AI is going to sit here and negotiate that transaction or tell you this is where the line in the sand is, because you're dealing with humans on the other side, and everybody's line in the sand is a little bit different. You kind of have to get to know them and understand where you can fit with this whole thing. But when we're getting submissions, we're getting huge amounts of data. We're getting 200-page policy forms. And there's a lot of documentation we have to do. I mean, you know, we need to take notes and understand, you know, both when we're underwriting initially and then we're going through renewals. You know, I mean, these are one time a year. So, you know, I'm gonna be really in the weeds of a transaction and understand it really, really well, but then I'm not gonna pick it up and look at it again for another 9 months. So I'm gonna forget all those details because I'm gonna have 20 other deals that I'm working on between then. So you have to document everything that you're doing and the conclusions you're making and all that kind of stuff, just to be able to, you know, to go back at the very least, just to go back and look at it, let alone somebody who's going to come in and audit you, right? I mean, our carriers, our capacity providers, you know, our doors, our books are open at any time. They can come in and see the work that we did, and they're going to want to sometimes. So we have to have all this documented. And honestly, that's just a huge time suck. It's not, you know, it's not something that is like rocket science here, writing up a Word document talking about like, you know, what you saw when you looked through the form and why you made the conclusions you made, but you have to do it, you know, and that's where we think the AI comes in, because we can, you know, some of the capabilities, it's like, well, we can have an AI compare two 200-page policy documents and lay out a 1-page summary of where all the differences are and why it looks. And it can do that in 3 minutes when that used to take me 4 hours, you know? And then even just writing some of this stuff up, you know, the AI these days, they can go in, they can look at all your submission documents, and you can kind of say like, you know, summarize for me just, you know, the coverages that are in this product that they're putting together. And I would have to go in and write it up, and what are the right words that I, you know, how do I exactly describe this? And spent, I'm always going to look through the submission. That's the thing. I'm never going to not. I'm that kind of a person. I'm never going to not get a submission and sit there and read every single page that gets to me. But to know that I have essentially a little AI assistant that can help me with putting it all into words real fast and do some of these technical tasks. We have our own rater and everything internally, right? We want to get to a point where essentially we can just have a database, and even if it doesn't exactly fit the format of our rater, it knows how to map it and run it through our rater kind of just on its own and and it'll summarize the assumptions it made. And then we can even tell it like, oh, you called this a dispensary and it should have been a grow operation, whatever. And it'll make those changes and do it real fast. I mean, when I go through do our rater, sometimes it takes me 8 hours just to map the data and get it all ready to go before I'm actually running the thing. I mean, running, it's an Excel thing. It takes a couple minutes, but that data cleanup process just takes forever. And honestly, we're trying to run a business here. So when I have to carve out 8 hours to go do this, it's like, well, it's basically a day that we're not talking to anyone, which is not good. The more people we're talking to, the better for our business. So in terms of our business, that's, I think, the benefit of what an AI can do, at least what we're trying to get it to do. We'll see as we explore.
Yeah, and then to tee up the second question you asked about just MGAs more generally, I think it's kind of coming back to a theme that we were talking about a second ago. When insurance is just highly standardized products and very tightly regulated, then these non-AI technology solutions from 10 years ago made a lot of sense, But when you start considering things like what we're doing or anything that's really just ENS, where there's very little standardization, sometimes you have manuscript forms, then the value of some of these earlier technology solutions, which really were basically leveraging like, okay, all this stuff that's coming in, all this data that's coming in looks very similar to everything else. So we've got these, processes that we can crunch through and we can turn out outputs very quickly. Except when you don't have that, then they're not useful. But that's why the AI seems so exciting to me today, because I think that a lot of people who might not have thought about, technology to help them be MGA entrepreneurs, they really should now, precisely because of what Andrew just described. You're looking at all this unstructured data, and this thing is user friendly, because before people would talk, oh yeah, we can ingest all your unstructured data, but it was like, yeah, but I mean, just talk about cat modeling, okay? So like the number of data standard innovations that different people have come up with so that RMS could talk to AIR, could talk to EquiCat, could talk to the Oasis thing, and back and forth and all day long. And you're like, okay, that's cool if I'm somebody who's just talking to a machine in SQL all day long. But if I'm an underwriter, it's, what am I going to do with this? But now the underwriter has a chatbot, and all that stuff happens in the background. And that's a huge, to me, that it has that's the inflection point. And I think we're right there.
Yeah.
Yeah, I think that the way to sum up the use of AI right now in general is that I want computers doing things that computers are good at, and I want humans doing things that humans are good at, right?
Exactly.
And so the relationship, driving that relationship with your clients or prospective clients and with every other entity that you're interacting with is really the key. That's what makes your business what it is. All the other stuff, everything else is just an operational function. These are a series of tasks that need to be done. And if a computer can do that, then there's certainly no harm.
I'm going to steal
Thanks.
Let the computer do what the computer is good at.
Yep.
Instead of making a human being do what the computer's good at.
Exactly. Because we're not particularly good at it, to be clear.
Yeah.
Think of the superpower. So insurance is so relationship driven, and you just free up all of your time. And then you end up with guys like you who I'm going to guess, but you might be the per employee most deployed reinsurance in the world right now.
Yeah, no kidding.
So take
headline
that.
of the show right there, I think. Yeah,
exactly. Yeah, and you probably can keep that title for some time by the use of more and more AI, especially for Andrew, who's in the back office.
He does all the work.
Running the book.
So guys, this does lead to another series of questions, which this is one of the most challenging things I think in the MGA world right now, which is, let's start with an assumption, and please kill my assumptions, as beat them up. That's totally fine. But we just talked about how relationship driven insurance is, especially at distribution. Okay, that's where it really matters. Claims, there's certainly some level of getting to know people. Trust me, that's my background. My world is claims, but in distribution, it is mandatory to have these types of relationships. So, how do you sell a company, and I mean your exit, a company that is based on relationships? Because what we just said that was so great about you is also the biggest challenge, because that also affects how you get capital, right? So how do you finance a company that is completely based on Andrew and Charles? And even if you automate a significant amount of the operation and tasks, it's still based on Andrew and Charles. So, so how do you get financing? How do you get that exit? How do you see those next steps? Because this is, I think, a common issue for many from a variety of different perspectives. It's number one, people who want to come in, create an MGA and say, hey, I'm going to talk to, as many VCs as it takes to get there, and I'm going to get the money necessary. Well, this isn't 2020. This is not 21. This is not the world of just handing out cash for MGAs anymore. So because they understand, first of all, there's plenty of people who receive cash that shouldn't have, and everyone felt the sting from that, right? From the world of VC. And so easy money, certainly is easily lost money. But, when we now in this current environment, so of course harder for them to get money to finance their MGA for some of the reasons we just discussed. But I'd love to get your thoughts on it and how you see what's that next step for you. How do you find that exit? How do you get the financing necessary to grow the company?
Well, all right, I'll just start with, I agree with you, because I preach this all the time, that if you can't separate yourself from the business and sell the business, then you've made a job for yourself, and it might be the best job you'll ever have. And there's nothing wrong with that. You can be self-employed and super happy. But that's not the same thing as build a business that you can sell. So you got to, in the first place, you need to be clear in your own head that that's what I'm doing. I'm building a business that I can walk away from. Or no, I love doing this and I never want to stop doing it. And both are perfectly valid paths in life, but in a lot of ways they're mutually exclusive. Now, they overlap, but in the end they go different places, and you got to be clear about that. So I totally agree. And I when we work with people that want to start up MGAs, I always look for, do they get that? Because if it's just, no, I just want to just be a salesperson and you guys are paying me my commission, they're like, well, de facto, you want us to be your employer, and we don't want that. So that's one part of our answer. I'm going to let Andrew talk a lot about the reinsurance component, because that's a very big, important way to address your question. But we have some luxury in that, reinsurance transactions are not the same thing as a broker relationship. And that's real important, because I want everybody to understand, out on the internet and you guys, we are not brokers, right? We are intermediaries, but we're representing the sell side.
Yeah.
Okay. But why that matters is our business, yes, it's relationship driven, but the value of the business isn't necessarily the relationship. Okay.
Yeah.
It's the book of business, which consists of contracts, and those contracts can renew, and those contracts are inherently not you. So if you think of that, that's the path to the answer. So Andrew, you can fill in the rest.
Andrew, sorry, before you do that, Charles, I think you touched on a really interesting point that's probably worth explaining a step further back. So for your man on the street who looks at an insurance company, there's a policyholder and there's an insurer. Clearly, in the world of MGAs and brokers, there's many more parties in these relationships. Could you describe a little bit, pardon the pun, but kind of up the ladder, the steps of these chains, the relationships that you have throughout them, and who you're kind of
all the way to the ladder. Get us from the bottom to the ladder.
Yeah, I love bottom. Yeah, ladder to ladder, right? I mean, that's I love the pun. I love the pun. It's great. Yeah. So just, I guess, to walk through the insurance transaction. So you have an end insured. There's a retail broker that they're talking to. That retail broker is ultimately being paid from all the people above the chain, but they're theoretically the way they sell their business is representing the insured and trying to do the best for the insured, trying to find the coverage that they need and working with as many carriers as they can. A level above that is kind of the wholesale. We kind of call it the wholesale / MGA level, because there's wholesalers that are MGAs and there's MGAs that are wholesalers, and sometimes they work with each other, so you get like multiple levels of broking. But really, this wholesale level is basically a relationship manager who works with a bunch of different retail brokers and connects them with the ultimate insurance company and capacity provider. Then there's the actual insurance company itself, the name on the paper that says, State Farm Insurance Company. Above that, then the insurance company is trying to buy reinsurance. So they'll use a reinsurance broker. That reinsurance broker in the reinsurance world is the equivalent of a retail broker in the primary world. They're representing the insurance carrier, trying to reach out to as many reinsurers as they possibly can. And they're ultimately being paid by the reinsurers, but they still represent their client, the insurance carrier. The reinsurance brokers in the MGA world will sometimes be working directly more with the MGAs because they're also trying to find the carrier. So the reinsurance brokers sometimes connect in with the MGA, they help them find the carrier, then they help them find the reinsurer. The level above that, that's where we are. So in most cases, you're going right to the reinsurer. So the reinsurer has a team of, 10 underwriters. You could be a smaller reinsurer in Bermuda and you've got a team of 10 underwriters, and basically reinsurance brokers bring their clients, their insurance carriers, to Bermuda, and they meet with a bunch of different reinsurers on the island, and you have a team of underwriters that basically you're looking at all these deals that are coming in and you're deciding, all right, I have 200 million of capacity, and how are we going to deploy that among all these different deals? What we are is essentially just an outsourced version of those reinsurance underwriters. Ultimately, we work with reinsurance brokers. We are just representing our capacity. And again, these are small balance sheets. So one of our best clients, it's a small little balance sheet. They have a team of like 5 people. They do their own business. They have primary business. They have other MGA business. They do their thing. We just essentially are their reinsurance department. That's basically the way they look at it. We're their assumed reinsurance department. Whenever they're writing reinsurance, it pretty much comes in through us. Not that they can't do it on their own if they want to, but pretty much it comes in through us. We have the expertise. We underwrite on their behalf. We do all this work, and basically there's a level of trust you have to have, right? Because we're ultimately an outsourced party that you're kind of trusting is going to look out for your balance sheet. And we take pride in the fact that what we're trying to do is to really take care of these balance sheets as if it was our own. But if I had the money that I own this balance sheet, would I do this? And it's very easy to say, with anything, especially in reinsurance, that you can find a reason to say no to everything, right? I mean, there's always any reinsurance deal, there's always some hair on it. There's always something that's in there that's like, okay. But in a lot of cases, it's like, really, what is the risk that we're taking on? This is the risk that we're taking on. You're taking risk. You have to understand that. If you're going to be in the insurance world, you're taking risk of some sort. And so we're the ones who come in and we identify what that risk is. And then I think, well, if I had money that I was trying to deploy, there's a balance, because you want to write business. We as an MGA, obviously, we want to write business, or else we wouldn't have a business. But even if I had a balance sheet of my own, and millions of dollars, the thing I know best is insurance, and I would want to deploy that into insurance in a way that I understand it. And so we take that approach to say, as if this was our money, we would want to generate a turn, but do it in a smart way and do it in a measured way. Be careful. And that's really the approach we take. So that's our role. And that's where, there are a handful of reinsurance MGAs like us out there in the world. But that's what they don't typically work with, like the Munich Re's and the Ren Re's of the world, because they're huge companies. They just hire people. Like they would just hire us as employees, if they really wanted to, but we don't want that. We want to be and be on our own. So
I think that's great advice, Andrew. Particularly, that you're insuring, you're taking on risk, and it's you feel very close to that risk in your role. Which, if you're part of sometimes a big corporate, I'm not saying everyone, but certain underwriters, they get that disassociation from the risk itself and what that entails and what that means to take on those kind of volumes of kind of limits that they do, because when you're in the industry, you can become quite blasé about taking on a $10 million risk, taking on a $25 million line, and forget that that's a serious amount of money.
Yes, it is.
Yeah. Well, and it's very easy. I mean, if anybody's worked at a giant company before, I mean, these big reinsurers, they're no different. You have a boss, you have production targets, you have pressures, you have the inner dynamics of a company, and oh, I want to do this, but they won't let me, and and then you end up getting fed up, and you just have that whole dynamic. The beauty that we have is we have none of that. I mean, other than keeping Charles happy, that's really the only inner dynamic I have to deal with. And, and we really get to keep our heads focused on, like, if this was our money, would I do this or not? And for our business, the way our business is going to be successful in the long run is if we are disciplined and smart, and we really take that to heart. And I would say that for any MGA as well. Like, it would, like I said, we could have given in to this carrier that we had and kind of done some stupid things, but in the long run, if you're going to build a successful MGA business, you need to treat it as if it's your own money, and try to be smart about it. And that reputation will precede you eventually.
I'll take that just a little farther. Okay. Because most of how we're growing value for ourselves and how we get compensated is in a profit share, and a true underwriting profit share. So like that, those big, those employees at big reinsurance companies, first they've got their base fixed salary. Then they've got the annual bonus pool that's aggregated across all the company, and it almost never is zero. We don't get our profit share until 3 years after we write a reinsurance treaty. So we're
after it expires.
Yeah. And we have an overhead load that we have to make sure that we exceed before we even get a share of that profit. So we're getting paid only on the underwriting return, the true underwriting return, after quite a while, much longer than most employees would tolerate, because they'd be like, oh, how come I didn't get my bonus this year? We wrote all this business. Like, well, the tail's still developing, so you can't, like most people would find, not accept that, but that's how we operate. So yeah, we take very seriously the fact that these people are putting a lot of money at risk, and we've got to do a good job.
Yeah.
I think I would go as far as saying the profit commission within some of these contracts is the most kind of misunderstood clause, and the one that perhaps people starting MGAs miss out on the most possible revenue from, because they're so keen on the top line margins, the difference between their commission to brokers.
They're the hardworking, they see the market opportunity, but they grew up just being paid just to make a sale and get a commission. And I'm sorry, but that's immediate, but it warps your thinking.
Yeah. So I think that's anyone looking to start an MGA, go to speak to someone like Charles and Andrew, understand what profit commission really means and how it can work for your business. Because, hey, if you're a salesperson or not, if you do it right, you can make a lot more money from that in the best use than you can from any commissions on your top line. Yeah,
100%. And honestly, the big advice, I think when we were kind of previewing this, we talked a little bit about compensation, and I would say my advice to anyone who's starting a primary MGA, unless you're working directly with retailers, which some do, and that comes with its own challenges, you really can't expect to make a lot of margin. If you're an MGA who's also working with other wholesalers, there's already so much commission being paid. No one above you, from the carrier to the reinsurer, wants to be spending 40 and 50% of their premium on just straight commissions. So the way you're really going to make your money is through profit shares and sliding scales, and the way in the market these days, it's these sliding scale commissions. So you have a huge upside, but you also potentially have downside where you're on the hook, and you could get to a point where if you write a bunch of crap business, you're making nothing, and you have all your own expenses as a business, so you're just going to fail. So if you're going to be an MGA, make sure you understand your line of business and you're in it to make money. That's where the upside is. Frankly, if you know a line of business and you know that it's profitable and you know that you can underwrite it profitably, go in and say, I want to do this, and then make it be based on profit and invest the time, 3, 4, 5 years, whatever it takes to get a book of business going, to let the tail develop. And then those big checks are going to start coming in, and that's where you really make your money as an MGA. You don't make your money trying to squeeze out another 3 points of commission. Like, you're going to have, there's so many policies you're going to have to process. There's IT, as we talked about. Like, there's just so many costs in the system as it is. That's not where you make your bucks.
That's a focus on long-term goal alignment, I think, and finding the right partners. Yeah, 100%. Love that. So no, we're getting up on time here. You guys are writing Cannabis right now, but I think there's thoughts on different areas. I'd love to get. We talked about that kind of in the pre-show about how there's parts of the economy I think that are maybe better fit for what you guys are looking for in the future. I'd love to just get your thoughts on. I know you guys came out of the cannabis space, but like how you picked that, and then maybe how you're thinking about exploring other areas.
So yeah, I would say we started with cannabis purely because that was where capacity was needed. So we saw it as an opportunity to say, all right, there's got to be more capacity out there that we can help find. And so it's an easy way to kind of start not easy. It was nothing about it. What we've done is easy, but it's a way to start a business where, you can bring some capacity in and people will actually talk to you because they really need the capacity. But we have started to pivot. We still, our primary focus is absolutely still cannabis. Anytime we have a cannabis deal in front of us, it takes priority, and that's what we want to do. But there's other opportunities out there, and we now have developed, a really good trusting relationship with our capacity providers, that they know that we know what we're doing and how we're focused. And there are other opportunities out there. So the way we kind of describe it is to call it weird insurance. So anything non-standard, we're not going to do auto or homeowners or property cat.
I love it. It's weird insurance.
Yeah. Exactly. But no, it's anything that kind of the big carriers just, maybe the total TAM of the market that they're looking at is relatively small. So like the idea that Munich Re is going to do all this work to figure out this market, like at the end of the day, if they can write 10 million a premium and that's the max, then they're going to be like, all right, I don't want to deal with this. Anything that's new and cutting edge. I mean, we've noticed that there's a lot of people in the insurance industry that just hate startups. Whereas we love startups. Like we love the idea of getting involved early on and helping an MGA and a business get going. I mean, we have a guy on our team here who's done 4 different businesses, right? So, and we've done it ourselves now too. So we know the insurance chain from top to bottom, and we know about starting businesses and the challenges that there are. We have an economics background. We're just really well positioned to help people start businesses, whether it's a new product or just an emerging line of business. We love that kind of stuff. We love to get involved early. And honestly, it's better for us too, because we get involved early, we help each other.
Did we lose Andrew or?
Yeah, I think we might have lost him just for a second there.
Okay.
Yeah.
Hopefully
It's bigger. The thought is that, we were there from the beginning. Okay. Sorry. I didn't know if it was me or what. Sorry about that.
No, we lost you a sec. We'll edit that out. It's fine.
So
now we can't hear you, but I think
so what I was saying, we love to be there from the beginning with startups. Oh.
That's too bad. So
my internet is.
But he's right.
Okay.
Weird insurance is our theme, and that basically means that there's almost no competition from other, big insurers or reinsurers. And I don't want that to be because it's property cat. That's not weird, right? That's very well understood. It's been securitized, packaged. It's traded. In some cases, it's exchange traded. So weird doesn't mean scary. Weird just means you don't know it yet, and that's exactly why I love it. Like if we can find somebody who's got an idea that other people just haven't thought of, then by definition, there's not going to be a lot of competition. So that's where we should play. And so we're always looking for people who can identify sources of risk that people previously just implicitly self-insured and didn't understand that that's what they were doing. And if you can make clear that, wait, not only were you paying this cost, as an opportunity cost or some other, non-pecuniary burden on yourself. And if you can risk manage that with an innovative insurance solution, your life is better. That's exactly where we want to be. That's exactly where we want to be. So that can take all kinds of far. That's really what I'm trying to say is that's the flavor of it. And where specifically in the world you find opportunities like that, I'm pretty agnostic. So it could be in manufacturing. Why the hell not, right? It could be in the gig economy, that too,
Love that. That's a
I
great.
think I bought up asteroid mining for you guys. I want to see that as your next program.
Doug's very keen on that, aren't you?
Yeah, I love
Absolutely.
it.
Yeah, no, listen,
That's my end goal.
ensuring the rockets that are going to go redirect that asteroid that's heading towards Earth and send it somewhere else.
There you go.
The only auto program. You guys will do an auto program if it's launching Tesla Roadsters into space. That's the
It's pretty niche.
We almost went a whole podcast without mentioning Elon Musk there, didn't we?
We'll get him every time.
Great.
Well, actually, before the legacy question, I want to hear what you guys got. When you're not killing things in reinsurance, just like blowing the top off. What are you guys doing? Blowing the top off in a good way, not blowing the book up. What are you guys doing for fun? What do you got? What are happening?
Well, I'm still addicted to my expensive cycling habit, so that's probably number one. And then I spend a lot of time talking to Andrew, which is actually much more rewarding than he's letting on.
Charles, so just to be clear, are you on the road a lot of times when you're practicing?
No, unfortunately. Well, I'll be honest. Yes, unfortunately. I understand that what we're doing right now is just the way it is. I get that virtual work and work from home and Teams meetings, Zoom meetings, StreamYard, whatever the hell, is just it. For example, we don't lease an office. I work from home. Andrew works from his home. And why would we do anything differently? That just makes complete sense. But just to be totally human with you guys, it just sucks. I'm sick and tired of talking to little squares on the screen instead of actual human beings. So that's my way of answering your question. We're not on the road nearly as much as I would like. There are lots of people we do business with that we've never actually met.
So, Charles, to be clear, I was talking about your cycling, but that is a great answer still.
Yeah, it's good.
Well, because I
agree about the office, 100%.
You mean, am I bringing my bike with me? So I'd love to. There are places like, not Bermuda, but but there are places I'd love to go on business, bring my bike and hit it. Absolutely.
I'll give an InsurTech Insights plug. There's a cycling group. I think it's over the summer, right, Peter? That takes place in Europe.
I think there is a full kind of tour. But the last one I did when we were at Target Markets, we went there and it was in Scottsdale. So we went with a couple of underwriters and my colleague, and we went out on the gravel trails on the bike and explored around. It's great fun.
Yeah, that'd be great. It's
better than golf.
Because I have a gravel bike. So I'd love to do that.
We could talk about bikes for a long time. We probably bore the audience to death with that. But
all right, Andrew, what are you doing for fun?
So I'm busy raising 5 kids.
Wow.
Yeah, we have, and we're in the thick of it. So my oldest is 17, and my youngest are 7-year-old twins. So we have a million activities with the kids, and we are, trying to just enjoy the peak. I just recently took my older son to go see the University of Pittsburgh. We took a weekend out there with the family and everything, and the reality's starting to hit that, like, oh man, they're going to start moving out, and then it's going to happen in quick succession. So we're trying to enjoy every moment with our kids that we possibly can, and life is crazy that way when you're trying to start a business and do all of this while raising all these kids. There are definitely days where I just feel like I'm crazy, but
I always say Andrew's one of the most courageous people I've ever known, because he had a job in corporate America with potential and all that stuff. And he left that, and all 5 of his kids were still at home, not out of, none of that. And at the time, his wife wasn't working outside the home, so it was just him. And he left all of that to go do this craziness with me.
Charles, I think
it's either very brave or very stupid, and time will tell still.
I think you need a bit of both to be an entrepreneur. You need a bit of bravery and a bit of stupidity as well. Yeah.
So, Charles, what you're telling me is that you have the charisma of a cult leader, is what I'm hearing. And so that's maybe your 5th act. So good luck. And then also, so you guys know, Peter's wife is due today.
Oh, yes. Wow.
So far, so good, though. She's still good. So
she's
suddenly rush off.
She's giving birth right now, but we decided
Podcast is more
We'd
important.
rather talk to us. We get it.
Yeah.
Priorities.
Always insurance first.
Charles is very charismatic. We just said so.
Yeah, there's always priorities. Laddery or birth? Come on, laddery all day.
People are born all the time.
Yeah,
Maybe in your house they're born all the time. In my
Well,
house
that's
there's
true.
just one.
true.
That is true.
Love that.
Yeah,
It's true.
funny.
Right. Well, look, it's been amazing to have you. I think there's so much amazing insight there for our audience, particularly those looking to start an MGA. And, we'll summarize all the amazing points to take away, and everyone can reach out to Andrew and Charles. We're going to put a link in the show to their LinkedIn to connect. I'm sure lots of people will be coming and picking your brains on in depth on a lot of these topics. To finish, as we always do on this show, we'd love to hear from both of you. Doesn't have to be insurance related, but your legacy. Once we kind of sit back and reflect on some of this stuff, how you'd like that to be and look like. So maybe Charles, we'll start with you.
Sure. Well, obviously, I mean, there's the legacy of the people in your life that you care about and why you're doing what you're doing, because you want to give them something that they'll have even when you're gone. Right. So, and another corny answer that I actually really think this is, if we can. So here's the way I look at it: is we back an MG entrepreneur, and that person is selling an insurance policy, in our case, to a business, and that business is most often a small business, right? So somebody put her or his life savings into building that business, and if there's a fire or something and it's wiped out, then they're screwed, and insurance helps them. And so all I want is, if even one, I'd love to collect those anecdotes. I talk to the MGA people that we help start things, and they can tell me a story where there was an insured that they were able to make whole. And then we can say, well, we played a part in that insurance being there when you were creating your business from the start. And if we can do that effectively, that's enough for me. That's a legacy.
Yeah.
As a claims guy, I completely agree.
Yeah, so we should have a whole conversation, because I think, there's a lot of underwriting focus, especially in bringing technology to insurance. But I think, and I'm not the first person to say this, that you don't actually experience insurance until you've had a claim. So to me, value in insurance, the way you should really do it is you should sub-select on the population of people who've had a claim and then renewed with that carrier, that same carrier, after the claim. Okay, that's where you see whether there's value in what you sold in the first place. I really, so we have a whole podcast on just that.
Yeah, no, and clearly the industry needs to do better in terms of claims, right? We talked about the human-to-human relationships of sales and distribution, but everybody in the world knows that the insurance industry, in terms of dealing with claims, is got a lot of work to do.
Yeah.
No, and I'll piggyback off of what Charles said and say it's the same type of thing, and really focusing more on this idea of startups or new ideas. If we can be there and take someone who maybe had an idea, but they haven't quite figured out a lot of things, and ultimately they're able to get a business going and sell maybe a new product that doesn't exist, that then impacts the rest of the world in some way. And if we were there to just help along the way and help them get started, and we were willing to take that risk, I think we are willing to take that risk. And I think that would be a huge legacy. If one of these startup MGAs turns out to be something that a lot of the world understands and knows 20 years down the line, and we kind of can know that we were part of that, that's exciting, because it's okay. We're really, changing the world in many ways. And then I'll say, on a personal basis, I'll credit a lot for my wife for a lot of this, for doing most of the work, but I hope I can be 5% of the work. My goal is to ultimately have 5 other humans that are just good people that can go out into the world and be good people and try to make the world a better place in their own way, whatever it may be. If I can pull that off, then I will have felt successful. Whether Laddery works out or not, I will have been successful on a personal basis. So
Nice.
Wonderful.
Well, Charles, Andrew, it's been an absolute pleasure. Thanks so much.
Yeah, guys, thank you so much for your time today. Lovely to meet you both, and look forward to keeping all the stuff that's going on at Laddery. I'm excited to keep watching.
Yeah, we appreciate it.
Thank you very much. Really appreciate
See you
it.
guys.
Thank you guys.
See you.
Thank you
Have a
guys.
good day.
Bye.
All right, guys.
Nice.
Those
So
two,
much content to get into there.
yeah,
Wow.
yeah. They make us. I don't know about you two, but they make me feel like a real dum-dum. To what did he have a PhD? Maybe he was a
know their
bit
numbers.
coy, but yeah, two real smart people there. How did we pull them? How did we get them on the show? Peter, that's all
Yeah,
you.
they were my lot of colleagues met them, Chris and Diego, at an event in the New York session with David and team there. So yeah, just got talking to them and instantly hit it off and connected a lot of points we spoke about just now with them. So I was fascinated to get them on because they give an insight that's quite unique. I don't think you see it out there as much. The kind of comments they were talking about, the frugality, the approach, the numbers, the human touch, and really understanding and being the center of everything with their business is great for people to understand when they're going down the road of an MGA, right?
Yeah, we could have had probably a 3-hour conversation with them. Big takeaway for me, I love one of them mentioned just the laser focused of where they are right now, how they're thinking about running their business. I think from a startup perspective, especially with MGAs, it's real easy to start thinking about the next thing, next line of business, next territory, next state, before you even have claim number one. And just keeping that laser focus on what you're trying to achieve, what the next goal is, the first goal that you have. Those guys have it down. They know what they're doing. I think there's something to learn there.
Yeah.
The frugality is my number one takeaway. I think that was fantastic. That's something that I think a lot of companies fail to do. I think MGAs need to understand that. I also think that's really interesting to speak to someone who is on a different part of the ecosystem, because they're not the standard MGA. They're in their own space. And I think that in itself, something again that we talked about today was how do you find that niche, right? How do you find a place with less competition, somewhere you can own? And one of their comments, which really stood out, was how do you take something that is previously or currently self-insured and create a product around it? I love that. That is a fantastic takeaway. Everyone should be focused on those niches. Everyone should be focused on how can I produce a completely new product, something that is going to benefit a solid subset of customers. There's a market for it, and then I can then get the capacity for it, create the product for it, and launch something. So I think MGAs of any level or companies anywhere on the value chain should be looking for that in the insurance space.
I loved their story about how they went to these ultimately now they're reinsurers, but not always. They were insurance companies or different parts of the ecosystem, and made the case for the business they wanted to do. They carved out their business within those companies. So many MGAs are knocking down the door of insurers that already do what they do. They have a solution for what they're bringing to the table. I think to go there with something new and be like, we're going to be the people to deliver this for you, that's obviously in their case and makes sense to be a winning strategy.
Yeah. You know what else I liked? Good merch. They have really nice merch. Ladder Re. What Dylan? We got any Age of the MGA merch coming on?
It's coming. It's coming.
Gonna go to China and get it for us?
I think that's a possibility. That's probably where it's coming from. Yeah. Vietnam.
Yeah.
But
what are we charging for that merch? $100? $100 for a t-shirt?
Yeah, well,
are we there yet?
I don't think we're there yet. No. It does. Right. The design such looks great. So we'll get there.
You like the Venmo request for the t-shirt was $100 that you sent me. I'm confused.
that was for 400 shirts.
But if you're wearing a shirt and we see you, they get a free beer from us, right? So it's
free beer. Yeah,
that's great value.
Dylan will do a secret handshake.
Yeah, well, I'll teach it to you. Yeah, of course.
Yeah. Right.
Well, we've got a lot more really cool guests coming on as well, haven't we? So
we have some people that are putting up with us. We don't know why. They're very kind. People in insurance are kind, most of them.
Just to be clear, one confirmed while we were on that show, even though I had everything muted, it popped up, and I saw.
She tried to come on. She tried to come on. I heard.
That's what it was.
I heard people are banging outside the door trying to come in when we were just recording these things.
That's your wife, Peter. She's
saying she's saying drive me to the hospital immediately.
Just wait 5 more minutes, love, and I'll be there. Yeah.
All right, guys. Well, this was fun. Had a lot of
it was really fun
here. So we'll see you guys all soon.
Cool.
Sounds great.